Michael O'Leary, Chief Executive of budget airline Ryanair, biggest airline in Europe. Thanks a lot for joining.
My pleasure.
I'd like to start off asking on airfares. Airfares has risen quite materially over the last few years since pre-COVID. In a more normalized supply-demand environment over the next, 3 to 5 years, what do you think we're looking at Ryanair airfares?
I think we're looking in the next 5 years to 2030 at, unprecedented capacity constraints. The manufacturers can't make any aircraft any faster because of supply chain tightness. They can't deliver any more aircraft to Europe. Ryanair has 300 aircraft orders for delivery between 2027 and 2034, but we're essentially the only people in Europe adding any meaningful capacity. So capacity is constrained in Europe short haul up to 2030, and I think there's going to be modest upward pressure on pricing within that 5-year period. So I would be reasonably optimistic on pricing in Europe, certainly short haul between now and 2030.
And if we look a little bit more short term over the next 12 months, consumer wallets pinch doesn't look like that's turning around anytime soon. How do you see that impacting on a more shorter term basis?
In short term, we think that's good for Ryanair because we are by far and away the lowest priced airline in Europe. We see strong growth. We've seen strong growth this year as we recovered from the OTA boycott 2 years ago. Demand even into this winter. Bookings are strong. Pricing is up on prior year. And I think what's driving that is our competition, who are capacity constrained, but suffering more cost inflation than we are seriously trying to drive up airfares, and that is giving us a lot of headroom. They're driving more and more price-sensitive passengers to Ryanair.
Your model is built obviously on being relentless on costs, in this more inflationary environment that we've seen. Yeah. How does that model work, I suppose?
Even better. I mean, if you look around, we're taking delivery of very low-cost aircraft from Boeing, aircraft we costed during the MAX grounding and then during COVID. So we have much lower cost aircraft than anybody else. We have airports competing with each other to give us discounts because the airports are desperate for growth and they recognize that we're the only airline that can deliver them significant growth. We will see some inflation on ATC fees, but that will be, the same for everybody in Europe. And I expect some bump inflation on labour in the next couple of years. In 2027, we come to the end of our current 5-year pay deals with pilots and cabin crew. So we will have to extend those either in 26 or in 27. But fundamentally, the cost gap between us and every other competitor airline in Europe is widening for the next 3 or 4 years. They're getting fares up. We're keeping cost well managed. And I think we're going to see some improvement in our margins over the next couple of years. I mean, historically, we've earned 10 euros net per passenger. 2 years ago, that went up to 11. We'll do 11 again this year. And I think in the next 3 or 4 years, as long as there's some improvement on top line fares and yields, we'll see our profit per passenger jump towards 12 or 14 euros per passenger.
Is there something about the business or kind of the market view of your Ryanair stock that you think is misunderstood?
They look at Ryanair and then they go, it's an airline. Warren Buffett says you never buy an airline. Well, Warren Buffett should have bought Ryanair. We're a very good house, but in a really poor neighborhood. We had some interesting studies done in the States last week where people pushed out our kind of TSR for the last 5 years, our margins, looked at debt-free balance sheet. And everyone, that's amazing. What is it? And then they said it's an airline, and nobody believed it. So I think people don't understand the fundamental strength of our balance sheet. They don't understand the unique price and cost leadership we have over every competitor in Europe, and therefore they miss the story.
You touched on obviously net cash balance sheet, generating hopefully tons of cash over the next few years. I mean, pretty unusual for an airline to be in that situation. But talk me through, I guess, what your priority is with using that cash.
I mean, we should generate a lot of surplus cash over the next couple of years, Marcel. We've committed as a company, we'll return 25% of net after-tax profits to shareholders by way of dividend in the following year. And then we're rolling out share buybacks. Post-COVID 5 years ago, we had about 1.25 billion shares in issue. We're now down to 1.05 billion. And I want to get that down to about 800 million shares over the next 5 years. So you will continue to see strong dividend flow, routine share buybacks. And as whenever there's a dip in the market, as there was last year with the OTA boycott, we stepped up the share buyback program. We accelerated it. Like last year, we bought back 1.5 billion worth of Ryanair shares at an average price of 17 euros a share. Today, I think the share price stands at 26. So that is a very useful and sensible deployment of spare cash. And that's the way we run the company. It's very disciplined. It is debt-free. It is hugely cash generative. But that cash belongs to shareholders, and it is our duty to return it to shareholders rather than frittering it away, as so many other airlines do.
Michael O'Leary, CEO of Ryanair, thank you very much for joining us.
Thank you very much,
We really
Marcel.
appreciate it.
Good to see you again.